In the race for AI, NVIDIA is the hare. They run fast, they grab headlines, and their stock chart looks like a vertical line. But there is a turtle in the semiconductor industry. A company that doesn't care about hype. A company that has been quietly building the foundation of the modern world for 90 years. Texas Instruments. While others chase the latest AI trend, TI focuses on the boring chips, the analog chips, the embedded processors, the chips that control your car's brakes, your factory's robots, and your home's thermostat. We have analyzed their financial filings from 2020 through late 2025. The data reveals a company that operates with the precision of a Swiss watch. They generate massive cash flow, they weather every storm, and they are currently making a massive bet on American manufacturing. This is the financial story of Texas Instruments, the cash machine. Let's look at the post-pandemic boom. Fiscal years 2020 to 2022. In 2020, TI generated $14.5 billion in revenue. By 2022, that number grew to $20.0 billion, but revenue is not what makes TI special, it's their margins. In 2022, their gross margin hit 68.8%. Their operating margin was over 50%. Think about that. For every dollar they sold, they kept 50 cents as operating profit. This efficiency is legendary. They focus on analog and embedded processing, chips that have long life cycles. Unlike a smartphone processor that becomes obsolete in a year, a TI chip in a washing machine might be sold for 10 years. During this period, they returned billions to shareholders through dividends and buybacks. They were the ultimate safe haven. But CEO Haviv Ilan knew that to survive the next decade, they had to spend money. A lot of money. Then came the downturn. The semiconductor industry is cyclical, and 2023 brought a correction. Industrial demand cooled. Customers who had hoarded chips during the pandemic stopped buying. Revenue in 2023 dropped to $17.5 billion, and further down to $15.7 billion in 2024. Wall Street grew nervous, not just because of the revenue drop, but because of TI's spending. While revenue was falling, Capital Expenditures, CapEx, were skyrocketing. The filings show CapEx jumping from virtually nothing to $5 billion a year. Why? They were building massive 300mm wafer fabs in Sherman, Texas, and Lehi, Utah. Critics said, why build factories when sales are down? TI's answer was simple. We are building for 2030, not for next quarter. They were sacrificing short-term free cash flow to secure long-term, low-cost manufacturing in the United States. Now let's look at the latest numbers from 2025. The 2025 quarterly reports show signs of stabilization. In the third quarter of 2025, revenue hit $4.15 billion. It's still below the 2022 peak, but the bleeding has stopped. Crucially, the automotive sector is becoming their engine. Modern electric vehicles need thousands of analog chips, and TI is positioned to supply them all. However, the heavy spending is still weighing on the financials. Free cash flow, TI's favorite metric, has been compressed by the massive factory investments. But here is the secret weapon, the CHIPS Act. The filings mention investment tax credits and government grants that will eventually offset these costs. TI is effectively betting that by owning their own 300mm factories, they can produce chips cheaper than anyone else in the world, giving them a permanent cost advantage over competitors who rely on outsourcing. From 2020 to 2025, Texas Instruments proved that being boring is a superpower. They didn't chase the AI hype train. Instead, they focused on the laws of physics and economics. They know that as the world gets more digital, it needs more analog chips to interface with the real world. They are currently in the investment phase of their cycle, which makes their financials look temporarily weak. But history tells us that when TI finishes building, the cash flow floodgates open. They are the tortoise that eventually wins the race. Thanks for watching. If you enjoy deep dives into the financials of tech giants, make sure to subscribe.